Hello, folks. Welcome back to Full Bore. Well, we have $5,300 gold. Congratulations. We have a lot of counterindications going on right now. The SPX hit 7,000 this morning before retracing for the first time in history. At the same time the SPX is going up, we have gold making a minor $3 trillion move last night, up to 5,300. We have the 10-year yield going up. We have all the Japanese bond yields spiking through. Big red flags. The US dollar is top wicking. We are forming a tweezer top there. The plunge protection team might be in there trying to keep the US dollar at this value, but the US dollar devalues by the millisecond. $100 in 2020 is now $70 today. There are problems. And then Trump is asked yesterday by a reporter, how do you feel about this constant dollar devaluation? And his response is, I feel great about it. He said, Russia and China have been playing games with devaluing their currency for years. Maybe it's time for the US to devalue their currency. Is it planned? I don't know, but it's good for metals. Metals are spiking, silver's spiking, resounding acceleration off the bottoms with silver. We're hovering around 115 right now. We're forming sort of a chopping pattern. We're coiling before the next move. But we got up last night to 116 again. So, I mean, $100 is in the rearview mirror for silver. I don't see a retracement below that for maybe the rest of time. We'll see. But as I was explaining to a friend earlier today, gold is up 102% in 1 year. This is the largest asset class in the world, a currency that's been around for 6,000 years. But gold hasn't gone up. The US dollar has devalued and debased. This is a real currency. There is a flight away from fiat currency, the US dollar. And some people say, I just don't see the US dollar going away. Well, this wouldn't be the first time in US history that the U.S. currency was devalued and debased to zero. After 1776, you had the continental currency. It was inflated, printed to fund the war by the Continental Congress, and it became so worthless that by 1781, it was completely abandoned. So this has precedent, and you have to watch this. You have to watch those bond yields. You have to watch the dollar performance. You have to watch the precious metals. I have a really good friend from India, and he's a brilliant guy. He's a founder of multiple companies. He's on boards of major tech companies in Austin. He travels a lot. He just got back from India, Southeast Asia, and Dubai, and he's a really good sort of litmus test benchmark of what's going on in the world. The world is moving on without the United States. We've been too confiscatory, too murderous, too warlike. We've destroyed our currency, too corrupt. We have the Nancy Pelosi's and the Debbie Wasserman Schultz's stealing money left and right. We gave $7 billion to Stacey Abrams' NGO. You have Mitch McConnell, Cocaine Mitch, as they call him. He's basically married to a Chinese spy. This is wild, okay? And the world is moving on. There's no longer confidence in U.S. treasuries. You have India signing a major trade deal with the EU now that is free of tariffs. Now, the EU, smooth-brained as they are, they're still buying massive amounts of Russian petro, okay? But they're doing it through India, who's getting filthy rich, refining and brokering that deal, and then selling it back to the EU for 3x. And now there is a natural gas crisis in the EU because of a really cold winter. Their storage capacity is down by 46%. There's major demand. They have Volkswagen factories closing. EU is in a free fall right now. It's crazy. So, look at the EU, look at South Africa, look what happened to Rhodesia. That might be in the future for America, especially blue cities, blue states, northern areas. JB, Jeremiah Babe, fantastic channel. Go follow him. Talks a lot about this. You might want to start making plans. Might. Do it. Get out of these blue cities. Get out of these crazy blue northern states. Massachusetts is a dump. Illinois, etc. I mean, at one time, Boston was a great city. You couldn't pay me to go visit there right now. It's really sad. I mean, these areas where the American Revolution started, Bunker Hill and Virginia and Baltimore, Philly, I mean, they have just been decimated. And I don't think it is just apathy. I think it's a planned destruction, but that's a whole nother rabbit hole we're not going to go back down into. Let's pay attention to these metals. Also, be paying attention to the GSR, the gold silver ratio. But we've got all the metals spiking right now. Platinum looks great, uranium, all the commodities. So we're going to keep an eye on it. Rick Rule gave a fantastic talk at VRIC, the Vancouver Resource Association Council, whatever. It's sort of like the Lollapalooza for resources and miners and everything. A lot of great content coming out of there, but I do want to urge caution in the investment space in terms of miners, equities, etc. Some of you are just physical stackers, highly respect that. Other people are trying to harvest fiat out of the market so they can stack more precious metals. Anyway, Rick Rule, he said biggest bull market he has ever seen in his life with precious metals, especially gold, was in the 1970s. But he said there were 30% or more corrections on gold during the 1970s gold bull market. And he said at one point in 1975, gold went from 200 an ounce to 100, and it washed a lot of people out. But when they sold at 100, they missed the move up to 800. Okay, so stand pat with your metals. He said to temper your enthusiasm with these metal markets with psychological preparedness. Be ready for the pullbacks. Be ready for the volatility. I mean, the volatility has been crazy. It's been exciting to watch, but you have to mentally prepare yourself for the ups and the downs. Don't be buying at the tops. Wait for those retracements. Just Dario had a great post on X talking about, the title was addressing the nonsense on silver spread by macro tourists, especially in the US. Talking about trying to judge market metrics by your local coin shop. And I love the local coin shops. I've been into them, but if you're trying to buy or sell a monster box or you're an industrial buyer, you're not dealing with local coin shops. So this is what he said. He said, if you go to your LCS with 5,000 ounces, he said, that means that they need $500,000 in the bank account to pay you. He said, how many LCSs have 500K cash sitting in a bank? These are LCSs that transact a few coins per day. They don't have it. That is not the way to measure the market. He said, what's driving silver prices higher is industrial demand. So these industrial buyers, Samsung, the solar panel companies, EV companies, and mainly in China, I mean, they use 1,000-ounce COMEX bars. Okay, so it's a block of metal. This has nothing to do with retail, small coins, whatever. That is what's driving it, as well as the printing and the dollar debasement. He's talking about the industrial demand for silver. The major users, okay, semiconductors, that's all made in Taiwan or China. EV batteries, it's all made in China. Data racks, all made in Asia and imported. Solar panels, mostly made in China, imported. Jewelry, mostly made in India and imported to this country. So those are the markets that you have to pay attention to. Said silver industrial demand is broadly price insensitive, meaning demand won't collapse with spike in prices. Every phone, battery, solar panel, electronic Roomba, or whatever, there are a few milligrams or a few grams of silver. However, these companies make millions of these. Their biggest problem is that their biggest consideration is they do not run out of silver. Without that, the item doesn't work. So they have to have a constant stock. They're constantly buying, and it's like keeping your gas tank in your truck half full during the winter so you don't get the water condensation in there. Always keep your gas tank half full. Silver mining is instead inelastic to increasing demand because it was too expensive to mine silver due to prices artificially kept low for decades. The vast majority, 800 million ounces of silver mined every year, is the byproduct of other mining like copper, tin, lead, zinc, etc. It takes years to bring a new mine into production. Everybody knows that. 8, 10, 12, 20 years, or you've got the Resolution mine, probably the largest copper mine in the country in Arizona. They still can't get permitting after 22 years, owned by BHP, I believe. Jack Prandelli on X, awesome post on U.S. oil supply warning, okay? I'm bullish oil. I disagree with Francis Hunt, market sniper, who I do respect. I tend to agree more with the oil bulls. If you chart this, we are going into the XY axis, major falling bull wedge. We really can't go any lower on oil, or they'll just stop. They will stop the rigs. They'll stop refining it. It's economically infeasible if we get much lower per barrel. He said at $60 in oil, the U.S. rig count is back to COVID recovery levels. 410 active rigs today, down 75% from the 2014 peak of 1,590 rigs. Barely above shale bust levels, flatlining despite stable prices. This is a danger. Shale needs constant drilling to hold output. Decline rates don't wait. Low rigs today equals supply shock tomorrow. I think we see $85 to $100 a barrel oil by the end of the year. So that's bullish for companies like Chevron, Occidental, Valero, Exxon, also the smaller guys, Devon Energy, etc. So keep an eye on oil. Silver and gold still kind of in the chop range right now. We just breached 5,300 up. We're back to 5,300 here on gold. Incredible. What a move. Largest asset class in the world. 37 trillion probably is the market cap for gold. It's going to go a lot higher. Gold does not go up and down. Gold is a constant. Gold is God's money. What goes up and down are fiat currencies. You're seeing the US dollar debase, and you're seeing it reflected in that gold price. Silver, we're in the chop zone. SPX, again, it hit 7,000. I don't know who's still piling money into tech and the SPX. It's retraced a little bit since then. Something has to give because you have all these counter indicators. We're going to keep an eye on it. Thanks so much for tuning in and listening. Full Bore Silver, like, subscribe, share. Talk to you soon.